you'll remember it shows. I used to get people peed out because I used to say owning silver was like kissing your sister. I was a big gold person, but never enthusiastic for silver. But silver's fundamentals have changed dramatically now, and you got to keep it on the same level. Yeah, I may still own a little bit more gold than silver, but gold and silver, and of course my metal for 2025, copper, I think they're all going to have good years, even things like zinc now. So I'm still very, very optimistic with a
Yeah.
good sense in my head, not to get caught up in it, that gold, as I said a year ago, will see 3,000 without ever seeing under 2,000.
PeterGrandich, publisher of PeterGrandich.com, reflects on past discussions about gold prices, recalling when the precious metal traded between $1,300 and $1,400. Today, with prices hovering near $2,650 to $2,700, Grandich notes a persistent complacency in the market. Unlike the hype surrounding Bitcoin, gold has not reached a state of overexposure, suggesting it retains significant room for growth. In recent trading, gold oscillates between minor gains and losses, settling near a one-week low. This subdued, range-bound price action reflects a cautious market as traders await more precise signals on the Federal Reserve's potential rate cut path. The upcoming FOMC policy decision is expected to provide more direction. Early week trading saw gold find support around the $2,650 level, reinforced by the 50-day exponential moving average, which has provided a technical floor for prices. Grandich maintains an optimistic long-term outlook for gold, predicting it will surpass $3,000 without falling below $2,000. He identifies 2025 as a critical year for precious metals, highlighting copper as a standout performer alongside strong prospects for zinc. However, market analysts suggest that gold's journey to record highs in 2025 will face challenges. One expert's 2025 precious metals outlook forecasts gold trading within a broad range of $2,500 to $3,200 per ounce, with its trajectory closely tied to Federal Reserve policies. The analyst projects an annual average price of $2,750 per ounce for gold in 2025, a 14% increase from the current year's average, driven by potential rate cuts and economic shifts. Silver, on the other hand, is expected to outperform all other precious metals in 2025. Analysts cite synchronized central bank rate cuts, a more favorable macroeconomic environment in the U.S. and China, robust solar industry demand, and a weaker U.S. dollar as key factors behind silver's bullish outlook. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Part of that issue, and I'm partly guilty of that, is those of us that were also bullish on gold also owned junior resource stocks, and they didn't perform. And that was like, it's kind of like gold's fault versus looking in the mirror and saying, no, it's my fault. I'm the guy that bought the junior resource stock. But that's part of the reason. But when you get outside of the U.S., especially in Asia, and you like I read purposely Asia financial news to see how the Asians are thinking. Chinese, they look at that metal in a much more positive view, and so forth and so on. And they're the people that have been greatly accumulating it. You know, we still see here, gold will always be treated poorly by the financial service industry. They treat it like kryptonite because it goes against what they make their living on, which is financial assets. So you're just never going to see somebody come on and tell you to buy stocks, bonds, and also gold. Only when it runs up a lot do we even see a word or two from the financial media about it and all. I think it's performed very well. I think you cannot deny the performance over several decades. And the fact that it's still over here and not in front and center tells me it still has a long way to go. My feeling was when it was, you're the main reason I'm back in this business to begin with, when you brought me up to Wall Street there several years ago, but at least doing interviews with you. But if you remember then, we were talking about gold at 13, 1400.
I do.
And wouldn't you say now that even with a 2650 or 2700, wherever it is today, it's the same lack of complacency. There's no surefire people, other than a handful of people that have been in it, for 30, 40 years.
Yeah.
And that's why it still has a ways to go. It's when you hear how Bitcoin has become and spoken
Right.
and all, that's when you have to start looking for the exit. We're not even remotely close to that for gold and silver. And by the way, you'll remember it shows, I used to get people peed out because I used to say owning silver was like kissing your sister. I was a big gold person, but never enthusiastic for silver. But silver's fundamentals have changed dramatically now, and you got to keep it on the same level. Yeah, I may still own a little bit more gold than silver, but gold and silver, and of course my metal for 2025, copper, I think they're all going to have good years, even things like zinc now. So I'm still very, very optimistic with a
Yeah.
good sense in my head, not to get caught up in it, that gold, as I said a year ago, will see 3,000 without ever seeing under 2,000.
Amid escalating tensions between the BRICS economic alliance and the United States, former President Donald Trump's proposed tariff strategy has reignited debates about the global role of the U.S. dollar. Following his election, Trump announced plans to impose 100% tariffs on countries seeking to reduce their reliance on the dollar, a move intended to protect the greenback's dominance in international trade. However, the BRICS alliance has long signaled its intention to challenge the dollar's supremacy. For the past 2 years, the bloc has actively worked to diversify global finance by promoting the use of local currencies in trade. Despite efforts by the U.S. to counteract this trend, the BRICS nations remain resolute in their goal, with China reportedly considering a significant step toward abandoning the dollar in response to Trump's tariff threats. PeterGrandich observes that tariff wars historically bring little benefit to any party and only exacerbate economic tensions. He emphasizes that the global economy is becoming increasingly fractured, with significant shifts underway that challenge the dominance of the U.S. dollar and the Western financial system. The potential for a 100% tariff by the U.S. is seen as a defensive measure to maintain the dollar's central role in global trade. Yet, instead of deterring BRICS nations, such actions may accelerate their push for financial independence. China's exploration of alternatives to the dollar is a prime example of this trend, reflecting a broader movement among emerging economies to reduce reliance on the U.S.-led financial system. Let's get back to the interview.
Yeah, there's nothing in history that says into tariff wars are good for anybody. And but I think a lot of also is this, as we get, we're still a month away from him coming in. I think a lot of this was blustering. Same thing like when people heard, oh, he's going to, anybody is thinking you're going against the dollar, we're never going to trade with you and all. Trust me, that comment was another marketing tool for the BRICS to get more countries involved, not to scare them away, but to actually realize, look what he's doing. And now since then, we've actually taken the interest that we froze from Russia and given it to their enemy. Again, these are the things that are going to be pointed out to countries when they're spoken to about maybe you want to think about working outside the Western world system and kind of coming with us. So a lot of people said that was the death of the BRICS. I think by the next fall, we'll see that not only was it the death, but it was actually an acceleration for them to get even bigger and better.
So just feeding the BRICS more, Peter.
Yeah, well, you don't want to get into one thing you don't want to do with Trump. You don't want to get into a war of words with him. And I think Putin and the Chinese, I think they know that. I think they've learned that from the first time around and all. But I also think that these are things that are set in motion that don't have reversals in them. There's clear that we continue to see a lesser use of the dollar. In fact, some say it's down to low 50% now usage and all. That's happening for a reason. And it's not going to all turn around because Trump somehow makes everything better. Again, markets are acting like that. Markets are hoping for that. But markets, when they don't perform on high expectations, that's when you have crashes and hard corrections.
Yep.
And that's the problem with the Trump candidacy now, that not too long after his time in, if he doesn't show a lot of success, markets can become very vulnerable to a very strong downdraft.
The evolving landscape of global finance highlights a significant shift as emerging economies actively seek to reduce their dependence on the U.S. dollar. While measures like proposed tariffs aim to reinforce the dollar's dominance, they may accelerate diversification efforts among economic blocs like BRICS. This ongoing transformation reflects broader economic realignments, raising questions about the future balance of power in international trade and finance. How will the growing shift toward local currencies and financial independence impact the global economy? Share your thoughts below. Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.